Now, unlike insiders, us, normal retail traders, you and I, we don't know what will happen in the future. We don't sit on inside information. Just like good old Kevin Hearn here sold his United Health shares just before the US proposed just this tiny increase in Medicare insurance payments. And I will go over what this means for United Health in the future, how this will affect Medicare just briefly so we can understand the scope of it, and also mention some regards to what happened at the earnings call here for United Health Group. So all of that in just a minute. So always interesting to see, always very interesting for active traders specifically. If you are one of those, then well, following along on how politicians trade can be very beneficial. They outperform us retail investors. But for those of us who don't have the time to stare at information all day and just buy and hold, well, long-term investment is the way to go. And very recently here, the stock United Health absolutely dumped, wiping out all of the gains that I had with this company, giving me a bag of roughly 4% down. Well, it was a nice dividend as well, so 1% down roughly, something like this. Not good, not good, but yep, time in the market beats timing the market for those of us who don't sit on good information beforehand. So in terms of the earnings, this is not what tanked the stock in my opinion, and I think that it's likely that these and other companies in this area will recover. I mean, they had lower than expected top line, yes, but they had greater than expected bottom line. So earnings per share 1 cent greater than Wall Street expectations. And I've seen this with insurance companies in the past when they focus more on profitability, well, then top line suffer. So it's an inverse relationship. In a way, there's correlation between this. If it doesn't make sense to write a policy because it's not profitable enough, well, they are simply not going to write that policy or renew it and just write policy to other people where it's more profitable. It can be more expensive, but then, yeah, less people insured. If something happened, obviously, that's bad for the individual. We see that in America. It's very expensive to get sick. It is what it is. That's how the system works. In terms of those who could need a little bit extra assistance and those who are, older or have some disabilities or something bad going on, well, there's a program for those, Medicare here, and it's paid roughly 25% premiums by the individuals and then 75% by the state. And this state payment here is increased by 0.09%. So this, in terms of real increases, right, adjusting for inflation, well, this is negative. Operators will lose money from this if they just continue as is. And they will adjust to this. We see this already. Restricting access to specialists, merging hospitals, smaller practitioners closing down, perhaps some less of these hospitals accepting Medicare. So these are some of the things that can happen. So on a top line, just less access to healthcare because profit needs to be there. They can shift higher costs to privately insured people, perhaps, but you can only do so much. So it's a bit of a precarious situation. I read in the article that the person responsible for the lobbying group here, I'm just going to read this quote. So, health plans welcome reforms to strengthen Medicare Advantage. However, flat program funding, remember 0.09, basically flat, at the time of sharply rising medical costs and high utilization of care will impact seniors' coverage, said Chris Bond, spokesperson for a trade group. So, yes, longer wait times, all of this is one of the things that can happen. And all right, maybe if wait times are so long and you really need the healthcare, perhaps it's time to just cut back on some other area of spending and cough up the money for a private health plan. Sign up with one of those insurers. So, you know, could potentially drive away some of the people using Medicare, make them sign up at other places, and perhaps some people just choosing to not do that coverage anymore as they don't see that, this is not a strong coverage anymore. It's not as worth it. It has some short-term and some long-term effects indeed. Very, very interesting to see where this whole flat increase is going. Perhaps it's just a bargaining trick from the Orange man in office to get more concessions out of the people in the pharmacy, in the medical field, make them drop drug prices, or some sort of negotiation. Or it's just the suggestion they are going with. We don't know. A lot of uncertainty, and the market absolutely hates uncertainty. So a lot of companies, United Health included, dropping big time on these news. So not fun to watch as a shareholder. Thinks this will happen, it will happen again in the future. All those gains from starting to buy the stock, I started buying below 300. I was very, very happy getting it this cheap, and then it started to rise again. Just bought a little more on the way up, not that much, but well, here we are back to square zero again, basically. And for a small bag, will I sell out of that small bag, that 1% loss? No, I won't. I still think that this company has potential to outperform the S&P 500 in the short and midterm. I think that we will see greater profitability in the future. Management talked about this on the earnings call as well in terms of the guidance, just raising it slightly, although you could argue that the increase in guidance was perhaps weaker than expected. But I think more expensive health insurance will drive up profits, and then perhaps top line will not grow as quickly as Wall Street wants, but nonetheless some strong bottom line, some nice dividend as well, 3% at the current price, just like it was, back when I started buying this company. And I think that's, a dividend that they cover now with the margins that they have. But should margins deteriorate further, well, then we are in big problem, because it's the margin that they use to buy back shares, invest back into the company, pay out dividend, all of that. Cash from operations is the best form of cash, and we don't want to see debt on the balance sheet and shenanigans like that to finance a dividend should margins drop a lot in the future. So still a lot of question marks around this stock. Do I think they eventually will be able to get things done and just ride out the storm? Yes, absolutely. They are a big company in the health insurance sector. They have a long track record, although as of late you could argue that there's been more idiosyncratic risk, and that's just a fancy way of saying something that happens specifically to a company. It could be the CEO makes a crazy tweet and jumps from a building, or some sort of crazy black swan event that's not related to the broader market risk, basically. A lot more idiosyncratic risk than I'm comfortable with. We saw the cyber attack, we saw the CEO being killed, and yeah, a lot of bad has happened to this company as of late, and that's really, really reflected in the stock price as well. Is this the last time that we're seeing a big dip? definitely not, but hopefully it will be the last one for some quarters ahead. Some recovery now would be very, very much appreciated. Alright, that's been it for this video covering United Health, and as always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.